Wondering how ETFs can fit into your portfolio? Join us for our Fall into ETF Investing event, a 4-part YouTube series premiering on October 18th, 2024, designed specifically for DIY investors. Check out these exciting weekly events we curated specifically for you, the DIY investor. Our special guest speakers and insightful industry experts will provide the information and education you need to gain confidence and empower you to manage your portfolios. You won't want to miss these weekly specials.
Hey everybody, it's Larry Berman here. Well, we're getting close to 10 days to the U.S. election, and there's no shortage of interesting things to contemplate and talk about. Early Friday morning, I had a periodic update call that I do with my good friend Larry McDonald of Bear Traps fame. If you haven't read any of his books, the most recent one, Listen When the Markets Speak, really put on your shelf in terms of the next few months if you're taking some downtime over the winter to read a good book and you're really into markets and risk management. Listen When the Markets Speak is a really good overview of the current markets and how to look at things and how to basically how to react and position. So we had a lot of discussions this morning about what's going on in the world and about setup trades for the U.S. election, and let's dig into a couple of those as we dive into the chart room this week. So first, I got a question on BNN last week, which I wasn't able to answer in real time, and I said I would tweet something out. I didn't get a chance to this week. I got a couple of emails come in asking me about it, and I just haven't got around to doing that. So put together a quick little chart here that I shared with a couple of people that had asked. And so the question was, DXV, is that a better vehicle as a money market solution compared to ZMMK or ZST that I often talk about to BNN viewers as something to use for a bit of a money market enhancement trade? So what I've done here is I've gone back a couple of years since the beginning of the dynamic active ultra short-term bond ETF, DXV, and I've compared it with some of the other ETFs that I mentioned, ZMK and ZST, and then a couple of the broader corporate bond ETFs, the iShares XCB and the BMO Corporate Bond Index, ZCB. There are others, but all will know that in my running funds for BMO, I mention a lot of BMO tickers, and they are sponsors of this weekly YouTube channel. So it's made possible by sponsorship, but I just wanted to clear that up there in case people ask on why you're always talking about BMO ETFs if they didn't know. The DXV ETF basically holds a lot of the same bonds that you would get in XCB or ZCB, which is the corporate bond universe. They do a selection of them, and then they use a derivative called a fixed for floating swap. And so they're swapping the coupon out, and what that effectively does is take away a lot of the interest rate risk and turn what is otherwise a fixed bond into a floating rate security that will do well in rate rising environments versus rate cutting environments and so forth. So you can see the path of DXV and how poorly it did while rates were rising, even though they used these swaps, because the underlying bonds were just doing very poorly during that period. And so subsequently, and if you only look at the last year or two, you get the perception that what DXV is doing is better than the other two. And while rates were falling, that would be a true statement, because they get some benefit. It's small, but they get some benefit if the swap isn't perfectly aligned, and it's never going to be on a strategy like this. If we look at the last 3 months and we compare what's gone on, it's pretty clear that, nominal bonds with interest rates falling up until recently, did really, really well. And the equivalent of those three money market-like ETFs are virtually identical with some differences. So the money market ETF here, which is ZMMK, is a different basket than what you get with ZST. And the differences are really in the basket of names. So ZST would be a bit more of a premium type yield compared to ZMMK, but ZMMK is going to be more stable because it's only buying discount bonds. And so you get a little bit more price volatility in ZST, but not much. But when you compare that to the dynamic version, there's a bit more vol with the same kind of return. And that was the point I was trying to make. So it's done with a basket of bonds. It's using some derivatives. Is it better or worse than the others? It's equivalent, and it's a little bit more volatile. So that's the answer to that question. And hopefully whoever asked that on BNN will get a chance to see this and follows me on this media as well. Speaking of media, let's talk about Trump media and the Trump trade. So last week we talked about some of the things on BNN and here about the US election as we get close. And it's clear that a lot of things that are leveraged to Trump winning are performing better. So DJT, Trump media, I believe if Trump loses the election, is worth virtually zero. All the other insiders that own shares have sold them when they could. Trump apparently controls 50% of the float here. Obviously, he might be a seller if he loses the election. Don't know. But the company's burning through cash, and if he loses the election, is probably not a going concern. Just my opinion, not a fact or anything like that. Just my opinion on things. The volatility on this name on options are suggesting that if Trump wins, this could be a $70 stock. If Trump loses, it's a $10 stock. So that's what the volatility right now is telling us. As the stock goes higher, it's more people betting on Trump winning than losing. So that's kind of what the DJT story is. When you look at Trump's policies on deficits, on tax cuts, on everything else, that's your TLT, doing worse. And so this orange line here, up until, a month ago-ish, bonds were rallying. The orange line was going up. This is percentage terms over here. And very recently, TLT selling off and now is down. So since we're using the 21st, so that was the weekend, July 21st, where Biden stepped down. And so we're taking price of these things from that point till now. Now, originally, Kamala got a bump, and everything that was related to Trump winning was soft. So what else is related to Trump winning? Well, Bitcoin. Now Kamala's come up a bit more positive on Bitcoin, but frankly, since the Biden falling out, initially Bitcoin down, Trump picking up, Bitcoin up, end-to-end flat. So that's the IBIT ETF. KRE, regional banking reform. So there's an expectation in the marketplace, so that's the red line here, that if Trump wins, you're going to get less regulation on the bank. The Jamie Dimon pleading for less regulation. You're tying our hands, blah, 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 blah. And so the regional banks have taken off. And so in recent weeks, real big rally there from where they were, in the first couple weeks after Biden stepped down. So there's a general thought that if Trump wins, that's better for the banks. But on the other side of that, it's bad for the deficit. And that's why bonds are selling off. And if yields are going to rise because of deficits and maybe a stronger perceived economy under Trump than under Kamala, then you're ultimately going to get some stress coming back on these hold to maturity parts of the bond market, like we saw in 2023 until the Fed pivoted. Now, those policies that were put in place so that these banks can repo their bonds and get liquidity around those assets have pretty much rolled off. And so if bond yields start to rise again, then there could be some stress in the regional banks. So one trade here that I put on today, on Friday, as I'm doing this during the day, is we bought a put spread on KRE out to next March. We bought a 45 long 145 put, short 240 puts. That trade cost me nothing. And if we get a sell-off in the regional banks, I'm going to take my profit on the long put and leave the short puts exposed, because I do want to buy a dip in that sector. But at the current price of where KRE is trading now, which if I swap this very quickly to a KRE chart, you can see why I bought a put at 45. And if we expand this out a little bit more, why I'm okay owning the regional banks below 40. So that's the trade, and it's set up that if Trump wins, that the rally in KRE is fully reflecting a Trump win at this point. So that was the idea there. Now, if we look at the online betting pools, so you've got Predict It, which is this one, trading at 60, which means that if you buy this at 60 and Trump wins, you get 100 for it. And if Trump loses, you get 0. So if you put that in risk return terms, you're paying 150 to 100 in terms of loss risk return. That's what 60-40 is. If you look at the poly market, which some argue is more liquid, that's actually trading at 65. So there's a trade here, perhaps, for an arbitrage. Now, I've never played these. I don't really know how to do that, but I just made that observation here late on Friday that there seems to be an arb situation there that you would buy one and sell the other and take some free cash. Possibly there's a spread on it, and the spread would negate that. I don't know. But anyways, at 65-35 win to loss ratio, you're almost at a 2-to-1 risk return. So the market seems to be overwhelmingly saying Trump's going to win the election. If Trump wins the top ticket, there's going to be a sweep. It would be extremely unlikely that Trump wins the White House and the Senate and Congress go the other way or are split, in my mind. Because if you're voting up ticket, you're probably voting down ticket. And if the marginal voter is moving the market here and Trump's getting more people to come out, they're voting the whole ticket, likely, as opposed to split ticket. And, we heard this week that in all the swing states, it's a virtual tie in every of the 7 states. And if you do a summary of all the polls, 48 or 49% each, and it literally is a coin flip. So the betting markets are saying Trump. Various indicators live in the stock market are saying Trump. And so there's a skew and asymmetry. And I love asymmetry. At this point, I think Harris wins the presidency, and the Congress goes to the GOP, and that's probably the best outcome. In my discussion with Larry McDonald Friday morning, we talked about what's likely to happen. And in the hedge fund community, they're generally thinking, no matter what happens or who wins, the market has a relief rally to the upside. And I think the smart money isn't chasing that. They're selling into it. Whether it lasts a week or a month or into the end of the year, that part, if I knew, I'd have all the money in the world. Anyways, hopefully, as we get into the colder months here, everyone looks to keep warm. I think there's a couple days of golf left in the season for me. So as you see this, I'll be on the golf course looking for a hole-in-one and crossing my fingers on the election outcome. Anyways, have a good one, everyone.